Hey, what's up guys, this is Ian, welcome back to Show Me the Money. Several countries have started already to reopen the vast majority of their economies, and definitely this has boosted the market, although some sectors still seem undecided about the direction of prices. Today I want to share with you my analysis over two stocks that I have just bought and consider to be great opportunities of being a high return investment: Astrazeneca and Airbus. During the last days, the market has been heated by several news and expectations surrounding President Trump's actions against Chinese companies, the next stimulus, the second quarter results of the big techs, a possible second wave of the virus in several parts of the world, and continuous information of a vaccine coming soon. It is no secret that the pharmaceutical sector has not been affected by this crisis, but in fact it has been benefited from this health concern. But among the buying frenzy of these stocks, there is one that might be pure gold at the price it is currently trading. The stock I would like to share with you, which I believe is presenting an excellent entrance opportunity the last days, is Astrazeneca, that trades in the New York Stock Exchange with the ticker AZN, currently around $55–56 per share. Astrazeneca is the leading company in the race of producing a functional vaccine for the current virus. In fact, their estimates point that it should be ready for fall of 2020. The vaccine they're developing at the moment in collaboration with the Oxford University is now on stage 3, and when a medicine reaches this phase, means that their success rate is at least 80%. Besides, AstraZeneca is already a world-leading company in the field of drugs for oncology, cardiovascular diseases, and respiratory problems. In this graph that you can get yourself on their investor relations website, we can see how, thanks to important developments they have done in the last few years, they have gone from being a company in decline to grow at annual rates above 10%. But how can we correctly value this company? According to their last results publication, we can observe that during the first quarter of 2020, they already grew more than 15%, and their earnings per share went up to $1.05, meaning a $4 of earnings per share for the year. This kind of companies of biotechnology with a relatively good growth rate and a high quality usually trades around a PE ratio of 25. If you don't know what the PE ratio is, or you don't really understand what it is, you can check my video about it that I'm linking down in the description. This way, if this year AstraZeneca is earning $4 per share, we have a target price of $100. A very interesting potential for a company that have not been affected by the current crisis and have promising perspectives in the term of the next 2 or 3 years. But the best of all is the forecast of the company that expects to be earning $7 per share in 5 years from now, which elevates the target price above $150. The next stock I would like to analyze is Airbus. Airbus trades in the Euronext Paris Bourse with the ticker AIR, right now around 70 and 75 euros per share. It is the classical high-quality company with a very low debt, but that happens to be in the eye of the storm because of the freeze of the aeronautic sector. And it's a no-brainer that investing in high-quality business companies when the market offers them at good prices caused by temporary problems ends up being exceptional operations. The commercial aviation sector is an oligopoly dominated by Airbus and Boeing, and it's been like this for the last 50 years. And in fact, it will probably continue for the upcoming 50. There has been several attempts from competitors of Japan, Canada, Brazil to enter this market, and have ended up in bankruptcy or selling to Boeing or Airbus, leading the stock price of both companies to higher and higher levels. It is just a matter of time that once the current illness passes, people will start flying again, and airlines will demand more and more aircrafts. In this graph, air traffic growth is estimated to continue doubling in the next 15 years, and those aircraft, of course, will be manufactured by Airbus in a huge percentage. Here, we can check the order list that Airbus manages currently of more than 7,000 aircraft, which is equivalent to $560 billion, 7 years of earnings. A clear sign of the demand that the company products have when we understand that if we order an Airbus aircraft, we will have to wait between 7 and 8 years for its delivery, and in turn making this business very predictable. On the other hand, their only real competitor, Boeing, has had to deal with 2 major setbacks. Its entire global fleet of 737 MAX aircraft was grounded in March of 2019, following 2 fatal aircraft crashes seriously hurting their credibility. The company had an order book of 5,000 units worth $600 billion of the 737 MAX family at the time of the grounding, and continues to face order cancellations from several airlines. Especially in today's market environment, it is important to invest in companies with low debt. If we check Airbus' balance sheet, they have a surplus above $12 billion, which is more than 20% of its market cap, around $14 per share. Last year, Airbus earned €6 per share. If we adjust the data, taking into account their liquidity, we have a PE ratio of 8, a very attractive valuation when we review that the historical PE ratio of both Airbus and Boeing have been around 20. This brings us a target price in the midterm of €120. But in the long term, Airbus aims to earn €8 per share, elevating our target price to €200, a potential of 280% growth for the next 3 to 5 years. So that's it for today, guys. I hope you enjoyed this video, and I hope this video helped you to understand some aspects that I like to analyze before buying a stock. If you did enjoy the video, please hit the like button and see you in a couple of days.